Welcome, everyone. This is, as you know, David Morgan, the Morgan Report. Today, I have Bronson Hill with me, and he's kind of a fascinating investor. He's written one book. He's actually good at one's in work, and he sent it to me. I read about three chapters, thumbed through the rest. But the idea of firing your boss and replacing your working income with passive income in 3 years or less, boy, did that resonate with me, Bronson, especially where I was in my career. And I had a very fascinating career with the Air Force from the time I left college. But there was that itch in me that the entrepreneur just can't scratch. So I was always doing these, what they call now side hustles. I was looking at a second source of income. And I thought I wanted these kind of passive things like mail order business or vending business. That appealed. Oh man, you just buy these vending machines and collect the money. And so I delved into a few things, some successful, some not so, but you really lay it out. So first of all, introduce yourself to my audience, and then let's just dive into the book and let's just talk about, we have to go chapter by chapter, but what was the reasoning behind why you wanted to write it, why you wanted to share it with the public, and carry on from there. Thank you for coming.
Hey, thanks so much for having me, David. I know we've been friends for a couple of years. You've been on a few of my panels, and we've had some great discussions over the years. So I'm so grateful for your friendship and just love all the value you bring, and just being introduced to you through different sources and just the expert you are in your space, in the metal space. So love it. So a little bit about my background. I was a well-paid medical sales professional. I was making good money. I was making 200,000 a year, but the thing that I didn't have was really freedom of time. And so a lot of people say they want financial freedom, but really, the thing people want is control over their time, and particularly in the medical field. Anybody's a professional, or you described your background before. You basically had, we're doing a time for money trade where we're going in, even if you're getting paid a lot of money, you're basically trading that time for a certain amount of money. When you start to learn about passive income, you start to learn about cash flow. It gives you the ability to make more money without taking up more of your time. And so for me, I started with some rental houses. I realized that wasn't as passive as I wanted to be. I wanted to do things that were actually more passive. And so I learned about syndication, which is basically investing passively or actively. There's a general partner, limited partner investing in apartment investing, or maybe other sorts of private equity deals. And typically people invest, and this is kind of what got me started, is really investing for cash flow, because I feel like if you can get enough cash flow to maybe not replace the 200K I was making, but I can replace the living expenses. I feel like I only needed about 6K a month at the time to live off of and live okay with that. So once I covered that number, I was free, right? So then I had freedom of time. And so I feel like when people are free of time, it's really become a passion of mine that people are free to actually pursue their purpose, to do what God put them here to do. And I feel like time is the thing. You can always make more money. You and I know that we can always make better deals and more money and invest and buy more stuff, and that's great. But the time, it's the time, and the people that I work with now. I work with a lot of high net worth investors, over 10 million, and it's just the thing that everybody wants is just those experiences with friends and family. They want to have freedom over time. They want to travel. They want to create. And for me, out of my time has really been these couple books that I created, Fire Yourself, and then I'm working on a new book now as well. But really excited to be here today.
Well, great. Let's pursue the fire yourself. But I want to add a few comments, and that is, purpose. I mean, I was just blessed with my purpose, and even though I had these great jobs and well paid as also, but it just didn't really fulfill me. And I had this desire to be in the field I'm in early on. I knew it as a kid, but I was kind of guided with my father, another direction, which I don't regret. I learned a lot. But once I was able to get that pause where it was like a career choice, make or break it, uh, I had a choice. And the choice was, well, I had enough savings to do what I wanted. And I, was taking a big risk because I wasn't that old, but old enough to take the road less traveled. And I'm so glad I did. And I like your idea not only of purpose, but the second one about, how time is valued. And this is my take. I mean, being a boomer, I mean, we had some really weird ideas. I mean, I admit it. I remember seeing the bumper stickers, "He who dies with the most toys wins." And as a boomer, that's sick. This is wrong. And the millennials, and I have two millennial daughters, and I've read, and I, from my own experience, which isn't vast, that they value experiences over money. And that was, my dad did quite well in the real estate market near the end of his life, and there's a tragedy there. I won't go into it, but before that happened, he said, really at the end, all you have your memories. In other words, your
Mhm.
experiences. So I think it's good that you voiced that. Do you talk about that in your first book?
Yeah, we talk about that in the first book. And again, I think one thing people think is that, this word passive income is really thrown around a lot, right? So people think that, if I have an online business or if I have a rental house or two, that's passive income. Or if I have some sort of strategy that I'm making money, or I'm selling, options online or whatever. But the challenge is like what I realized, I had four rental houses and it wasn't really passive, right? Even though I had a property manager, they were in another state. I wasn't really getting passive income. It was actually, I was getting, the tenants aren't paying. What do we do here? Do we evict them? There's a repair issue that would come up. These homes were in a part of Cleveland that wasn't the best area. So on paper, it looked great. And then the cash flow it didn't look as good over time. But I find there's a test too, because a lot of people that I imagine are listening are high net worth. Maybe they own a rental house, a vacational house. They're doing something after. But my thought is, if you can't 10x the amount of resources you're putting towards it. I mean, you can't go from 3 rental houses to 30, or have 10x the amount of capital. You're investing in options, but you're only putting a very small amount of your worth in there. Then you're not really passive investing, right? So there's this kind of there's this thought that you can just be doing all these different things and scale, but it doesn't really become passive until we start receiving that mailbox money. And you've been a guest on my show, the Mailbox Money Show, which is about that, right? Even now we should call it the direct deposit show, where it's like nobody really sends checks anymore, but there's direct deposit.
Yeah.
But that's where I think the educational piece is really important, because once I learned about that, even though I was making money, if I was making 200K in my job, if I could make 10K more per year in passive income, and I could grow by 10 or 20K, or just keep investing more in that, over time, it becomes this snowball that eventually grows and grows and grows. And that's how guys like Warren Buffett and some of these other guys have done so well, is that they've just started to do it. They've continued, they've learned, and then they continue to scale wealth more and more over time. And so real estate does it. There's private equity does it. There's ways to make money on all different types of things. We've done ATM machines and car washes and oil and gas, all kinds of different things. So I think that there's a lot of things out there, but really, cash flow is the biggest thing. There's two other reasons people really invest. It's usually for cash flow, appreciation, or tax benefits, right? So they're all powerful things of reasons why people passively invest, especially in private deals.
Well, like we started out with your, 4 rental properties. I mean, that's kind of how I started out. I didn't start out with 4, but I just couldn't handle it. It wasn't that passive. The guy's got a new Cadillac, but he can't pay the rent.
Yeah.
I just can't handle it. It's like, that's just not for me. And there are other ways to do it. Why don't you speak about when do you transition from that? Okay, this is actually like a job. It's giving me stress. They're not paying. I got these repairs. That same person, moved out, trashed the place. My actual net on the place is 0, even though on paper, I made 500 a month by the time I got all this done. But you didn't give up. You said,
Right.
okay, there's another way. When did you have that moment of, oh my, I'm going to make it work, but I have to have a different approach?
Yeah. So initially, my thought was to get 30 houses, to have 30 houses and be able to rent these out and be able to have cash flow and retire, get 6 figures of income from this. And then I just realized how much work it was taking. And I really ran out of capital, honestly. So there's really 2 ways to scale. I have there's a saying, when the student is ready, the teacher appears. And so I had a relative of mine who was a big multifamily guy, I didn't know it at the time, but lots of different apartment buildings. And he started with a duplex. Now he's got 1,200 units, him and some partners. And I said, here's my plan to get these 30 houses. And he said, that sounds like a lot of work. Why don't you do multifamily investing? I said, like apartments? Is that what you mean? And he's like, yeah, apartments. And I said, well, I don't have the money, right? I've already invested in all this stuff. And he said, well, you can raise the money. So there's basically 2 ways people come at this, right? So if I'm somebody who has, I had a good income, but I didn't have a lot of savings. If a lot of people have high net worth, they're worth 2 million, 5 million, 10 million. They have typically more money than they have time. They don't want to spend the time doing it. So they can actually pay somebody to go and operate a deal, and they can be a passive investor. So when we talk about mailbox money, it's not fully passive. Nothing's fully passive, but because it is your money. Nobody cares about your money the way you do. And so it typically involves finding, vetting deals, finding the right operator, the right partnership. We have deals we do. There's lots of groups out there that do this, and then choosing to invest, putting the 50 or 100 or $500,000 in, and then basically, watching the statements. But the work really is on the front end, right? It's finding the deal, finding the right group, vetting them, looking at their track record, talking with other operators. For me, because I didn't have the money, I thought, well, how can I help this group of people that has more money than they have time, right? I wanted to make myself valuable to valuable people. So what I did is I learned about raising capital. I learned that I've got sales skills. I did 10 years of medical device sales. I feel like maybe this is something I could use. So I just started talking with people that I knew. I started creating content. And then basically people started coming around and saying, hey, I'm interested, and let me know when you have a deal. And it kind of grew over time. So I think it's a really great way that it's kind of unique in the investing world, David. And we all look at Wall Street and kind of shake our heads and just say, there's such a misalignment of interest, right? And I was a investment advisor for a few years, kind of before I started doing all this real estate. And so there's a term called RIA, which is registered investment advisor. I call myself a recovering investment advisor because I saw there was just a misalignment of interest. You lose half your money as an investor, they still get paid. That doesn't make sense. Versus a lot of real estate and other deals through syndication, there's a real alignment of interest. Typically, the partners often put in 5 to 10% of the money raised or more into the deal. There's a split on the profits. It's actually, I think, the way investing should be, right? If you make money, it's like the hedge fund model. If somebody makes money, you make money. If not, then nobody makes money. But I think it's a way that we can really work together. So that's a little bit about how passive investing, and particularly the syndication or the private placement deals look.
I have three entry points into my paid service. There's the basic letter, the letter where I do all the videos during the month. And then I have like my mastermind, which is for pretty much AIs, accredited investors. We get private equity deals in the mining, the resource sector primarily. I've stepped outside of that idea a couple times only. But then I've got this day with David kind of things where, they can call me anytime on WhatsApp for any reason, basically. And that's a time killer, right? So I only have 2 guys on there. I said all that to say this: the one of them buys businesses, and that's something that a lot of people are not really aware of. I've been to a lot of investing seminars in my life. I mean, mostly resource and gold, silver, and trading, but one was about buying businesses. Fascinating, because a lot of businesses, for example, like one that's almost a sure bet, not always, is dry clean, car washes. There's some that do better than others, and the markets are always changing. I mean, if you were in the VHS tape rental business for a while, you could do really well, and then of course they came out on CDs and everything is streamed. So you got to be careful. But what I wanted to point out was buying businesses is something that most people don't even think of, because a lot of I'd say medium to high net worth individuals have a going concern, but they don't have kids, or the kids aren't interested. They got their own careers. And yet you can buy some of these businesses for like a PE of like 4 or something.
Yeah.
You don't get that in the stock market. Have you ever experienced that, or do you have any in your group that I'm sure
it's incredibly, I love that you brought that up. A good friend of mine, his name is Walker Dybel. He wrote a book called Buy Then Build. And it's basically a private equity buying businesses, a process, incredible book. And so we've done this. We've kind of done a private equity roll up with car washes. We're in the process now. We're always looking to buy smaller businesses, and a lot of them will trade for 3 to 5 times profits, which is crazy. I mean, in real estate, we think if we get a cap rate, which is the amount if you were to pay in cash, what's the percentage you would get per year? And if you get a cap rate of 5, 6, or 8, that's great. But on one of some of these businesses, you're getting a 30 or 35 cap rate basically on a business, which is crazy. So I think the amount of cash flow is really exceptional. So there are groups that do it. There's larger groups that do it. I think where a sweet spot is if you can get into some of these smaller mid-sized businesses, that generate, maybe they sell for 10 million or 20 million or 5 million, or, the profits might be 1 to 5 million a year. It's in some cases too small for private equity, but just to your point earlier, a lot of boomers, they're looking to retire, and a lot of these businesses are just going to kind of go to, they're just looking to sell them. So sometimes you can even pick them up where, especially if I was a young person, I think I'd go look in my neighborhood or friends and family, whatever, and see if somebody has a business they're trying to get out of, and just see if I can do an earnout, which means I could basically work for free or work for, the first few years. And then in 3 years, I would own it completely or pay out the owner along the way. There's ways to do that, or kind of apprentice. But I think as a passive investor, or even as somebody who is active, I think it's an incredible thing that a lot of people don't think about. And really, I think, David, one thing that has changed, particularly in real estate, with rates rising so significantly the last couple of years, a lot of the cash flow in real estate is gone. The only things that cash flow in real estate, some of the short-term rentals, but some of the rents have gone down in some of those. So I think if you can find things that actually cash flow, really, I mean, there's oil and gas and there's businesses. I don't know of a whole lot of other things that really significantly cash flow. So I think that it's an incredible place for people to look. A lot of people are kind of intimidated by it. There are some funds and groups out there that do it, but I think it's something if somebody wants to be a little more active or find an opportunity where they can be passive, I think it's a great opportunity.
Well, it truly is. And just to circle back to real estate, I mean, I've got a degree in finance, whoop-de-doo. I mean, one of the younger guys I just hired was working towards his degree in finance and he quit. He just said there's just so much BS. I'd rather dive in with you in the real world. But having said that, my math background, just common sense. I mean, I don't want to make this too much about me. But the point is, I looked at these things, especially in Southern California where I started, and we're negative equity. I mean, the payment was, make up a number, $1,000 a month. You're renting it for $800 a month, but you're going to get rich in real estate. And for me, at that time, interest rates were much higher than they are now, even though we have record high interest rates. Well, I'm old enough to know when, a good mortgage is 8.5%. And so, but I would look at it like a bond. So if I'm going to spend $100,000 on a bond, I want a 10% yield. That means I get 10% of my money back every year for the duration of the bond. Let's call it a T notes for 10 years, and I get my principal back. Okay. And that's why I looked at real estate. Like it should cash flow to me. It should cash flow to me at a rate commensurate with the going rate of the prime interest or whatever. And then I have my principal, which may gain in value. I mean, that's what everybody's betting on. But, the old adage, one of the ones I love in life investing is when everyone's thinking the same, nobody's thinking very much.
Yeah.
And that's when I got out of the single rental family home deal because everybody was doing it. Everybody was going to get rich. It's sort of like the Bitcoiners. And I'm not putting anyone down. Look, I'm as free market as they come. But I'm glad. Would you like to address that at all? I mean, it was just my logic. It's like this, and plus the workload. I mean, something goes wrong, or they call you in the middle of the night. And even have a property manager, they're not answering the phone at 2 a.m. You are, or you get the voicemail.
Yeah, no, it's unfortunate. I think, for me, I wish I'd gotten this lesson sooner, but we all get it when we get it, and we just have to be grateful we got it when we did. So I was in my late 30s and was like, wow, I think I really. I'd been had one single family house and then started doing more. But I think the reason why we're so drawn to single family homes is that we have familiarity with it. We live in one, we're familiar with it, we know people need them. I'll have this one, I'll get another one. And for a while, I will say this thing positively about single family homes. The type of debt some people have on single family homes right now to have a 2.5%, 2.25, a 3%, even below 4 or 5%. I don't know if we're ever going to see rates like that again in our lifetime. It's unbelievable. So then the asset actually becomes the loan more than it is actually the house. Yeah. So that is very, very interesting. But I think there's a belief that most people will think that, hey, I should do real estate and it's through single family and that's how I'll become financially free. And you can do it, but it takes a very long time. It typically takes about 10 to 20 years. And I just, I was able to 20x my net worth, from a net worth of, a few $100K to, over 3 or 4, 6 million, whatever, within a short period of time, in about 4 years. And I did it through scaling up with multifamily. And now, again, I was raising money, so there's a little bit different there. But I think that, you basically get the same or better returns. And this is the part that people don't realize. We undervalue our time, right? We undervalue the time. If I'm somebody who makes 50 or 100 or $500 an hour, which there are people listening, I'm sure that do, some physicians I used to work with in medical sales make a lot of money per procedure. They shouldn't be on the phone managing this stuff. They shouldn't be dealing with the gardener or the property manager and this stuff. So a lot of times we can say, oh, I'm making all this money, but it's taking up time. And so unless you really enjoy basically being a property manager, which is a high burnout type of job, there's very few people that I know that say, I love being a property manager, but there are people that do, but it's not my gift. But I would rather own everything and operate nothing. I mean, that's really my goal, even as a fund manager and what we do. I'll be on the team and I'll help parse different things, but I want to bring money. I want to educate investors and bring money things. And I want all of us to own everything and just operate nothing. And I think that's what really gives you the freedom over time. So for example, last year I was able to travel 6 times internationally. I left my corporate job a few years ago and it's been great. So I just have these goals and I'm creating and writing and trying to really create as much value as I can and live out of my purpose because again, life is short and the older I get, the more I realize the years go fast. And they say it's a phenomenon that picks up as we get older is just the year. I think is it already halfway through the year? How did that happen? And it just happens every year, and it's I catch myself saying, 20 years ago, this and this happened. And I'm like, man, I'm becoming my dad. It's crazy.
Yeah. Well, let's go back to purpose for a minute. Uh, so when I started with my passion and I started a website and started, writing books and speaking and all that stuff, put a lot of hours, but I didn't feel like I was working, so I don't want to misguide the public that, passive investing is awesome. I mean, you get to this point, I'm, listening to you, you're there. I've been there for some time, but there's still the choice of time. In the beginning, there wasn't really too much choice. I had to make this thing happen or not. And that meant, a lot of hours, but I never felt I was working because I loved it so darn. Can you talk about that?
Yeah, I think there's Dan Sullivan who helped co-write the book Who Not How, and there's a book called The Gap in the Game with Dr. Benjamin Hardy. They talk about this idea of unique ability. And so unique ability is there's only so many things that we do. And not only do you have great skill in, but there's this idea of passion, right? There's this idea of an energizing effect. There's never ending learning. And we only have so many things that we really have passion around. My dad taught me that growing up. He said, do something you're passionate about and you won't work a day in your life. And of course, there's always times we have to do the dishes and we got to do things we don't enjoy. But in general, if I can be doing 80% of my time doing the things that I just love doing and I'm helping people and it's changing the world. I'll give you one example of this. The Japanese have a term called ikigai. I don't know if you heard this. It's called ikigai.
I've heard of it.
But it basically has this 5-fold different thing. I'm probably going to miss some of them, but it's like where your purpose comes together with your passion and your how you can make a difference in the world, and just all of these things come together. So you're making the biggest impact to the most people. You're making a difference in the world, and you're living out of your purpose. But there's a proverb that I love, and it says, "Without vision, people perish." And so I think this is one of the reasons that we have so much depression, so much issues, in just stuff in you look at our stuff in our culture is that people they haven't discovered what their purpose is. And I think that it's so easy to be distracted. There's so many distractions these days, but we can just come back to, hey, this is what I'm here to do, and this is what I love to do. And when I look at you, Dave, I can just tell you're doing exactly what you're here to do. You do what you love. You speak from your stories and your passion, your experience, and you're helping others, and you're impacting. And that's what I want to do. And so I think for all of us, finding that area of passion, I think it's probably the most important thing we can do, because without it, we're just simply kind of floating along, and life is tough. Life is negative. If you don't have a reason for any of it, then you're just going to continually be beat down by the circumstances of life and wonder why things aren't working for you. So I think all of that personal development work has led to a lot of business and other success in my life. And I know in your life as well. And so, but yeah, the idea of purpose is, if you are financially free, you are free to live out your purpose. Something like 68% of people are not engaged at work. They don't like their jobs or their bosses or whatever. So, and to me, that's a tragedy. I mean, how would the world look if the people that were passionate about property management or passionate about doing these certain things in certain ways, like they were able to do that rather than living out from a place of fear. So I think that for anybody listening, I just, encourage you wherever you're at, just continue to seek out the purpose and take steps towards it, because time is short. And this is, I think the longer we wait to do certain things, we say, someday I'm going to do this. It gets pushed further and further off. I want to say one more thing about that real quick. So writing a book is a very difficult process in some ways. I know you've written several books. It says something, there's a stat that says that 81% of people of the US population say they have a book in them. So 8 out of 10 people would say they have a book in them, but only 0.6% of people have written a book, right? So there's a very few that actually written, and those that start, only 15% finish. So I think that, again, whether it's purpose, it's writing a book, it's telling a story, it's just moving towards the things that are important is so, so important. And when I started writing my book, my first one, Fire Yourself, I got about 80% done. I was like, I'm not going to finish this. I need to hire a coach. And so I hired a coach to help me, and we were able to get it done. But otherwise, it's easy to get stuck if you've never done something and it feels like it's out there. So whether it's purpose, it's writing a book, it's going after your dreams, I just think those things are so critically important.
Absolutely. If I could just cut out one segment out of this interview so far, it would be what you just finished. I mean, the passion and the fire for life, it just makes it, and it's not money dependent. I mean, it has, we have our needs. Let's face it, we got to pay our
Right.
bills. But, I remember when I hit that sweet spot when I started, and I thought, this is so cool. This is just, and I was making far more later on, but it wasn't the money. It's that I hit that spot, like you mentioned earlier, where I was making
Yeah.
this much doing sales in the medical field. If I only made this much, I was there. I was financially free because that's all I needed for, my family to eat, pay the rent, whatever. And I remember that. I still remember that. And it's just a feeling that unless you accomplish it, you can't really express it. But,
Yeah.
and you get there because you want to get,
Yeah.
not, you don't want to, you want to get to that point. But what I mean is the passion's driving you there. So, I think there's an expression, maybe not, but the summation of it is, if you follow your passion, the money will come
Yeah.
or whatever it is. And I am familiar with that term. There's a networking group I'm involved with currently, and kind of the leader is Japanese. And he
Ah.
talked about those 5 points recently. But this is a great segue. So you did all this, and then you said, aha, let's do a second book. What brought on the second book, and what's its purpose?
Yeah, so I was on a Uber ride. I was in Dallas, Texas, on an Uber ride, and I got off the phone, and this woman who was driving the Uber, it was the Uber driver, said she stopped and she said she overheard me talking about it with an investor or talking about money or transferring. She would obviously tell me doing some investing stuff, and she said, tell me how do I learn about money? How do I learn about becoming wealthy? And I just stopped and I was like, I didn't really quite know what to tell her. It's a big question. Like, well, read some books, go to networking events. I didn't really know. So I kind of thought about it and I realized in my investing journey and, raising $40 million from private investors, I've actually had the opportunity to interview one-on-one over 2,500 investors individually. These are questions around net worth, values, what's important, what are their goals, what are things that they do, what are their habits. And so what I realized is that the second book, it's called Rich Brain, and it really is how the wealthy change their brains to change their bank accounts. And so people don't realize that, we become what we repeatedly do, right? So I think that's what Aristotle or some philosopher had said. And so in this process, there's a number of pieces to it, but a lot of it has to do with the mindset it takes to be wealthy. Being wealthy is not something that we just everybody wants the money, right? Everybody wants to win the lottery. Everybody wants to have their rich uncle die in and gift them millions of dollars. But there's a reason why. I think it's something like 30% or higher of lottery winners go bankrupt within, a few years, right? It's maybe even higher than that. And so, there is a process of becoming wealthy. Again, there's this be, do, have. I'm not sure I didn't come up with this, but somebody came up with this where people want it in reverse order. They want to have the stuff and then they'll, do the things and they'll become, the wealthy person. But you have to actually become the person first, right? You've got to, and I know you've done a lot of personal work. So, you became the person that was, a hard worker. You had the integrity, you had the mindset. There's stuff around the worthiness it takes to actually handle wealth and to not self-sabotage. We go into a situation and not to simply, doubt yourself or kind of get stuck in self-talk. So it's becoming the person. Then after as you're becoming the person, you're doing the actions, you're reading the books, I mean, there's a big piece is education. There's some principles here. And the last one is then you can have the stuff, right? But people want to have the stuff first and then say, oh, once I have the stuff, then I'll do this. But it really doesn't work that way. And there's a thought that in society, I think something like 65% of people believe that people are wealthy because of their circumstances, their advantages, their education, but it's just not true. There's this idea that people are born with a silver spoon in their mouth. Well, Fidelity Investments did a study in 2019 and they found that 86% of millionaires are self-made. So it means that they did not inherit the money. So that's almost, 8 or 9 out of 10 people, they learned how to do this. They had the habits, and over time, these things have a cumulative effect over time. So basically, it's kind of how what's the mindset it takes, and what are the wealth habits it takes to become wealthy.
Very good. I just want to add one thing to that, but the very famous Jack Canfield, when he just got started, he put out this. You'll laugh. You may not even know what these are, cassette tapes,
Yeah,
and it was a
heard
cassette
of those.
tape course, and it was self-esteem and peak performance. And I listened to those darn. That was kind of the first real self-improvement course I bought, or first one on audio anyway. And I wore those darn things out. But in that, he says, it's not becoming a million. It's what you learn as you become a millionaire.
Love
That's
it.
it.
Yeah.
And he's just so right,
Yeah.
and your lottery example is perfect. So when is the second book going to be out for the public?
Yeah, well, I'm writing it right now, so I'm typing as fast as I can. So I'm hoping by fall, I would say probably mid late fall. I'm hoping for. We'll see, but I'm super excited. I'm starting to speak about it quite a bit more. And again, there's just a lot of things that are habits people do, and it's just there. Some of them are kind of obvious. Some of them are really not well known. And my hope is it's a Rich Dad Poor Dad meets Atomic Habits. What are the things that people can put into their life? And if they do these things repeatedly, they get their mindset right. They learn, outrageously. They make it a job to learn. I know you and I talked about that before we started recording. It's just, last year I read 98 books. Wealthy people typically are reading a lot of books. And then they're really committed to networking, expanding networks, expanding value to other people. So I think those are things that are incredibly valuable. So it'll come out soon, and I'm excited to be able to share it with your audience as well.
Well, you're one of your staff has sent me stuff that's available for investment. I mean, how do we get in your network? Tell us more about your business, and if you have to qualify as an AI, and if so, how do we get on the mailing list? What do we do? Because I like your approach. It's not like you're ruled by it has to be multifamily houses. I mean, one of the best investments my sister made, kind of I wouldn't say on a fluke. I mean, we try to research the best we can, but it was oil and gas, and she put in.
Yeah.
A fairly good amount, but she made 10 times on it, right?
Wow.
Never got her
Amazing.
principal back. It was a cash flow deal. But, I'll definitely give you 100 grand to make a million over 10 years, any day of the week.
Yeah.
So
Exactly.
you've done a good job. Let me just turn it back over to you. If, my audience, are serious investors. They have a sense of humor once in a while. But how do they get involved with you or learn more about what you do or align with you or whatever?
Yeah, yeah. So my book is a great way. The Fire Yourself book. You can pick that up on Amazon. My website is bronsonequity.com. So we have information about some of our resources. You can join our investor club there. I have a free giveaway for your audience as well. So it's a guide of how to use inflation to your advantage. Of course, they say inflation is 3-4%. I think it's probably 6, 8, 10%. We don't exactly know what it is. But there's some methods using real estate, even using metals and borrowing, and there's some unique kind of strategies there. If somebody texts the word inflation to 33777, then they can just get a free copy of that 40-page guide, and that will get you kind of in touch with our stuff and let you know about our club and different things that are there. So that's the word inflation to 33777.
I think what's so good about what you do is, as you outlined earlier, that you might have a high net worth, but you're sitting there in T-bills only or whatever because you don't know what to do. You don't want to lose it, and you don't want to manage it.
Yeah.
And with what you've done, it's, your time is purposeful to get higher yields safely by taking the time to do it. And, a doctor's a perfect example in my view, where, they got a high net worth, but what do? They don't have time and they don't want to be on the golf. They get that one golf game a month or whatever it is. They don't want to be out there and then have to answer the phone because, the toilet's overflowing. Sorry, I have to throw that in there, but,
Yeah.
that type of thing. So, I think let me just ask you this, because I really don't know. I mean, I've met so many people worldwide in my travels and all I've done, but there aren't a lot of people like you that are broader based. A lot of them are, multifamily units, and that's all we do. Or we specialize in buying businesses, and that's all we do. Or we do second mortgages. We write second mortgages on, and really go hard at it. Doing notes is kind of a cool thing, but it's not the only thing. And rather than pick a guy that does second mortgages, you know what I'm saying?
Yeah.
You have kind of a much broader expanse of, there's lots of opportunities out there in the world. Of course, you have to vet them and you have to do diligence, and we're not perfect. We might make an error, but within the boundaries of the conglomerate, you're doing a great job. So what brought you to that? I mean, you went from single family houses to multifamily, then expanded even from there on your own.
Yeah, that's a great question. Well, I think what I learned while investing in multifamily investing is that once you understand how one of these private placement deals are set up, people syndicate all kinds of different things. I was kind of exposed pretty early on to people syndicating banana farms or coffee farms in South America, and there's all kinds of crazy stuff people do. And I'm not necessarily like, I don't just want to be like, I invest in alligator farms or there's all kinds of crazy stuff. But I think as a passive investor, really there's three goals people have. It's either cash flow, it's appreciation, or it's tax benefits, or it's a mix of those, right? So if I'm a high earner, I'm trying to reduce taxes. Things like oil and gas can be really helpful. There's other things out there potentially, or maybe somebody can become a real estate professional, which allows either you or your spouse, if you put in enough hours, you can reduce taxable income through depreciation, which is a great way to get around that. Again, no specific tax advice. And then things like cash flow. Businesses are great cash flowing. So the last couple of years, as things kind of shifted with real estate, and I started saying like, things don't really look as attractive here. Well, if I'm an investor, I'm just looking for one of those to solve one of those problems, right? And so in my book, Fire Yourself, one of the chapters, I think it's chapter 5, I talk about the deal funnel. Like, how do you analyze a deal? And it gives you how do you look at the market? Again, there's a market for every real estate deal or ATM machine investment or crypto mining fund, whatever the thing is, right? You can look at the market, then you get down to the operator, and then you get down to the deal. Now, I always start with the market, because if you're in a terrible market that's shrinking and that's not good, there's all kinds of risks in the market itself. It doesn't matter how great the operator is or how great the deal is, because you're in this kind of higher risk space. But if you're in a place that's growing, there's, especially in real estate, for example, there's more population growth, job growth, income growth. We know in 5 years, rents are going to be substantially higher than they are now, right? And then if you've got an okay operator that's in there, similar values, and that's important to look at, and then to see the actual deal itself. But it typically, I try to get a really wide amount of deal flow. I'm always open to hear about deals, even from your listeners, whoever. People reach out and say, I've got a deal, I'm looking at this, and we kind of look at it. We put it through our funnel, and we say, well, is this something that fits one of these needs? What are the risks here? And I think for any investor, this is a little tip that comes from the book on vetting. When you may say, I don't really understand how to vet this deal. Well, one thing you can do is say, what do I think as an investor the biggest risk of this deal is? Right. I can think about what's the one or two ways I could lose money, because you obviously want to understand how you can make money, but what's the one or two ways you could lose money? And then when you talk with the operator, try to have a conversation with them if you can, and say, well, before you even tell them what you think it is, say, what do you think is the biggest risk of this? And if they don't have an answer for you, it means they're inexperienced or they're not being fully transparent. But it may be a very different answer than what you thought of. And so I just think those are tools that, again, as we grow as investors, it's a great time. I think right now is actually becoming, we haven't really done a multifamily deal in the last couple of years. We're just starting to do multifamily deals. We just closed on one recently. We're getting back in it because now we're seeing stuff discounted 20, 30% of what it was a couple of years ago. So we're seeing it. So, but again, it's moving where people are not necessarily moving, like you were talking about, right? If everybody's buying a certain asset, well, maybe it's time to sell. Maybe it's time to get onto something. And I know you did that big move with silver, right? You told, hey, it's time to sell, and that was not very popular. It was like it was super hot, but that's moving from one asset class to another as an investor. I think there's a lot of wisdom in that.
Yeah. Well, I think we covered a lot of ground. It's just been a pleasure learning from you and listening. Is there anything that we didn't talk about that you'd like our viewers to know?
I think there's always a lot to talk about, but I love, connecting with folks. I love connecting with your material and you personally. And it's just great to all the value that you're sharing and the stories and the wisdom that you have. But no, I'd love to connect with anybody in regards to active, passive real estate, other sorts of passive investing. If somebody's selling a business, all that stuff, love connecting with it, because it's just amazing when we communicate with each other. It's really how Main Street beats Wall Street, right? We have to we don't spend billions of dollars advertising, right? You and I and all these, we're doing private deals. We have to just kind of word of mouth, and this is how we help each other. So love to serve your audience any way I can, but it's been a pleasure, David. Thank you.
He just brought up one, and I don't want to get the last word in, but this was kind of an eye opener for me. I was born in San Francisco, California, lived in California a lot of my life, and I've been to Chinatown or whatever, other places. But so here's the bottom line. I'm walking down the street, with all these shops, kind of the tourist area in Chinatown, San Francisco. And this guy starts telling me about the advertising industry. And he says, everything that's heavily advertised is garbage. And that if you really have to advertise it, it's probably not worth very much. But something that's really good is word of mouth, and everybody wants it because it adds value to their lives or whatever. And it was one of those aha moments, because I was so naive. I was pretty young. I'll use that as an excuse, but it was like, he's right. And if you have to hype this thing up 25 times a day to get me to drink this black liquid, how important, how good can it really be? That's what your thoughts on that. It's humorous, but it's not, because we get these, sleepy, what I call naivete in some markets, and the advertising industry is one where I was pretty darn naive. What say you?
Yeah, absolutely. No, I think the lessons that we get, it's 100% true is that with finance, follow the money, right? And it's funny how stocks and bonds have become, traditional quote unquote investments, right? And there was a time, between 1929 and 1954, that was the time it took to recover if you had waited out for the market to recover. Of course, you don't count inflation in that. And I imagine there was a time in there, of course, we weren't, alive then, but people would say, why in the world would you ever buy stocks? Right. So, but through these retirement, ERISA, all the retirement stuff that's happened and just the way they've made it that this is traditional safe investments. But if anybody really spends time thinking about it, your audience is a lot of alternatives as well. But it's just something I think we got to get the message out. And I think it's a purpose, it's a calling. I see it on your life, I see it in mine, and we've got to share because otherwise Wall Street and these big companies win and just regular people don't. And so it's the learning, right?
One of the best paperbacks back here is called The Invisible Crash.
Hmm.
And it shows you a stock market that just keeps going up. But if you weight it against a constant like gold, it's actually going down.
Yeah, exactly.
And that's the truth of the stock market today. If you measure it against gold, a constant, it's actually gone down from the year 2000. And here we are in the year 2024. I know you admire my work. A lot of men better than me. I mean, I had to learn this stuff. It's not something they teach you at finance school, believe me.
That's right.
Go on and on. I think we burned it out for now. I will have you back. I'm sure we'll get a lot of questions. I honor your time and your purpose and just your whole demeanor. It just resonates with me. You're a high energy, high purpose guy, and I know you balance your time well. And as I say to everybody, just repeating what you said, our most valuable asset is our time. And the older we get, especially speaking for myself, the more we value it. I mean, it's time with the granddaughter, time with the kids, time at the beach. And also, I love what I do still. So it's time looking into that mining company or whatever it is, but it's my call. And that's what gives you control over your life is I get to spend my time how I want to spend my time because I am financial. Been great having this conversation. Look forward to our next visit.
Thanks so much, David. Thanks for having me.